For more on how today's House vote will impact big tech, let's bring in Gene Munster of Loop Ventures. He knows more about this than I'll ever forget. So, Gene, thank you so much for joining us here and talking about this with us. Which of the names do you think might be most in trouble that are caught in the crosshairs? Is it Apple? Clearly, Tim Cook is worried if he's placed a call to Speaker Pelosi's office.
Courtney, before I answer that question, I want to kind of lay the groundwork that I think the central question here for congressional action is consumer well-being. Are consumers being harmed? And at the center of that, that's really what dictates antitrust law. And there's two forms of that embodies. One is price gouging, and second is lack of innovation. And I think more broadly, consumers love these companies more than traditional companies. And I'm going to get to answer your question right now about Apple specifically, is that the reason why consumers love it is that these companies give them utility. Just across all four of them, there's significant, whether it's entertainment or productivity, better value for your money. And that has caused a lift to broader society. I think the congressman's comments made some light of that. And so when you think about risk profile, Apple has been more proactive. They recently came out with a white paper talking about sideloading, which is the ability to have an app store run outside of the iPhone ecosystem, and why that would not make sense. That's something that's on the table here with some of this legislation. I think the key question, again, whether it's sideloading or any of these, is the consumer being harmed? I think the answer is no. I think consumers are better off. And I think when you put that together versus trying to triangulate which one is most at risk, I think that they're all collectively going to breathe a sigh of relief in the years to come. The bite, I think, is going to be less than the bark.
It's funny, I often think about Amazon and how much Amazon has changed retail, and consumers really are the beneficiaries. I mean, we have more price transparency. It's really forced the rest of the industry to up their game when it comes to delivering us things quickly and at a lower cost. And so it's hard to make that antitrust argument just on that one part of it. But of course, they have many different silos of businesses, and they have AWS, and their advertising business is very large if you separate that out on its own. So if you look at an Amazon, is that a company that regulators would have to scrutinize more closely because it has so many different silos that could stand on their own?
So maybe looking at the four that are in play here, I think that the ones that are probably at most risk are Facebook and Google, specifically how they can use one platform to leverage their other platforms, whether it's Google Search to YouTube, Facebook to Instagram, for example, very straightforward. So if I was going to say, I'm going to be wrong, if you're going to take the perspective, I'm going to be wrong, that there is going to be something that's going to come out of this, who's most at risk? I think it is Facebook and Google, followed by Amazon, and I think Apple is at the least risk of all four.
Hey, Gene, so we know for the last couple of years, obviously these major tech companies have been staring down the barrel of the potential of this regulation. We haven't seen a lot of big tech M&A. Do you think that is something that will continue to stay on the sidelines until we get more visibility on this? Or at some point, don't we have to start seeing some deals happen here and really test the mettle of these regulators?
I think we're going to see more. You're right. This has kind of been going on for, call it, 18 months in a more rapid fashion. I think, probably the biggest piece of M&A that we've seen is probably Amazon, MGM, something like that. So there is M&A that, that's not closed. So there is M&A that's circulating out there. I think the way this plays out, we're going to continue to hear this. I hope to join you again on further segments when there'll be new talk about this. And I think that the arc is going to be the same, is that this will probably slowly fade into something that gives these companies the movement to do M&A like you're talking about and to continue to better consumers. So agree with that. I think we're probably going to continue to see a lull in some of the big M&A over the next year, but we'll pick up over time.
Gene Munster of Loop Ventures, thank you for joining us. Let's trade this. Tim, I want to go to you. If something does happen to go into play with the self-preferencing, which of these names do you think could be most at risk? If Apple is not allowed to preference its services above all others, does that make that ecosystem less valuable?
Look, I don't know. I mean, you can make an argument that it's really Google, especially in search engines, or maybe even Amazon for vendors. So the other thing we just didn't talk about, and I'll leave it for another chat, is if you broke these companies up, would some of them be a lot more valuable with the pieces? And that's part of the conversation we have. But look, these headlines, we've been dealing with these for a long time. They go nowhere.
What about Microsoft? Anyone want to just buy that one if that one's not in the crosshairs as much as the others? We're approaching $2 trillion, Mr. Dom.
Yeah, the knock on Microsoft for the last year and a half, 2 years, incorrectly, has been valuation, and it continues to grow into valuation. So, yeah, I mean, I think Microsoft, I'm not going to say they're impervious to this, but out of the list of the names we just mentioned, I think they're the least at risk. So, yeah, if you're worried about that, Microsoft should go to the head of the class and things of not to worry about for one of these F-MAGA complex that Dan coined almost 2 years ago.
Yeah, Courtney, just to be clear, it's Facebook, Microsoft, Apple, Google, and Amazon.
Thank you.
Okay,
Thank you for clarifying that for me and for others that might be new to the show and new to that one.
Shepard Smith here. Thanks for watching CNBC on YouTube.